Okay, let's unpack this. Welcome to the deep dive. Today, our mission is really to cut through the noise. We're diving deep into Zeta Global's recent Q2 2025 earnings results and their forward guidance. This company, well, they're a significant player right at the forefront of AI-powered marketing. We're here to help you quickly grasp what's really driving their performance right now and what might be coming next.
What's fascinating here is just how consistently strong Zeta's Q2 performance was. Just right across the board, they reported revenue of $308 million. That impressively surpasses the $296.62 million forecast. Adjusted EBITDA came in strong at $59 million. And their free cash flow, it surged a remarkable 69% year over year, hitting $33.6 million. Even the stock saw a bit of a bump. Modest, sure, 0.44% in regular trading, plus another 1.27% aftermarket. It signals, a solid initial vote investor confidence.
Yeah, those initial numbers, they definitely paint a picture of some serious momentum. But the devil's in the details, isn't it? Let's peel back the layers on those financials, because I have a feeling they'll tell an even richer story. Consistent growth seems to be the theme. That $308 million revenue figure, it's not just a beat. It represents substantial 35% year-over-year growth.
Yeah.
And what really stands out to me, like you mentioned, consistency, this is their 16th straight beat and raise quarter. That's a track record, right? It suggests more than just, good fortune.
Absolutely. And it's not merely about the top-line growth either. Their profitability is expanding significantly right alongside it. Adjusted EBITDA, that's basically their core operating profit before, interest, taxes, depreciation, all that, it grew by an impressive 52% year over year, 52%, to $59 million, pushing the margin to 19.1%. And get this marks their 18th straight quarter of expanding adjusted EBITDA margins. That says a lot about their operational discipline.
18 straight quarters of margin expansion. Wow.
Yeah. And that free cash flow, the cash they generate after covering operating expenses and capital expenditures, the stuff they can use to pay down debt or return cash to shareholders, it isn't just up 69%. That $33.6 million translates to an 11% margin and a 57% cash conversion rate. That's a substantial improvement from last year. Shows they're incredibly efficient at turning that revenue into actual usable cash.
Okay, so 57% cash conversion. That sounds really high. They're converting revenue into cash at a fantastic rate, but often you see rapidly growing companies prioritizing, say, market share over immediate cash flow. Is this kind of high cash conversion unique for a company at Zeta's stage? What does it tell us about how they operate?
It's quite significant, yeah. Many growth companies, they're still burning cash, right? Or just breaking even. But Zeta has established this really strong trajectory of profitable growth. That 57% cash conversion, it shows they're not just growing revenue for growth's sake. They're doing it in a way that generates real capital. It really indicates a very mature and disciplined approach to scaling the business. They're carefully managing costs, maximizing efficiency, even while expanding rapidly. And this financial strength, like you noted, it's clearly connected to their expanding customer base. Their scaled customer count grew 21% year over year, up to 567 now.
Right, 567 scaled customers. And we're also seeing a nice increase in the average revenue per user, the ARPU, for those customers. That's up 11% to $532,000. Plus the number of super scale customers, those are the ones bringing in over $1 million annually, that increased 17% year over year, now stands at 168. So what does this all mean for how they're actually growing the business? I mean, how are they achieving this kind of consistent performance, not just in the numbers, but in getting customers to actually invest more with them?
Right. If we connect this to the bigger picture, a core differentiator for Zeta and probably a primary driver for these results is their relentless focus on AI innovation and data-driven solutions. That's truly positioned them favorably in the MarTech sector, especially as businesses demand more measurable results, more ROI from their marketing spend. Take Zeta Answers, for instance. It's their new AI-driven product. This isn't just about faster reporting or dashboards. It's about fundamentally changing traditional marketing workflows. It moves beyond just identifying patterns, it's actually prescribing and automating actions in real time. It's kind of the difference between getting a smart report and having a co-pilot that actually takes the wheel sometimes. It closes that critical loop between insights and action to boost customer engagement and, crucially, deliver that superior ROI.
That's fascinating because for so many years, AI in marketing felt more like a buzzword than a real breakthrough, didn't it?
Yeah.
Can you give us some concrete examples? Like, how is Zeta Answers actually making this tangible, real-time difference for their clients?
Certainly. One striking example they shared involved a large state government. They used Zeta to target job seekers for relocation. They leverage Zeta's proprietary circles of influence capability, which basically maps out and targets the digital connections around a core individual. Think close networks, friends, family, colleagues. By engaging not just the job seekers themselves, but also these close networks, this strategy drove a 30% higher engagement rate just by including those close contacts.
30% higher.
Yeah.
Just from targeting the network.
Yeah.
Wow.
And another example, a Fortune 100 tech company. They utilize the leading indicators module within Zeta Answers. This module works by analyzing huge data sets to identify really subtle, real-time intent signals from potential customers, things you wouldn't normally see. By proactively tailoring its marketing based on these signals, they saw a 10% improvement in engagement. So this really demonstrates the power of truly prescriptive AI, moving from just looking backward at analysis to, forward-looking automated action.
Okay, that's incredibly specific. And it really drives home how Zeta Answers translates into tangible, maybe even unique results, things others probably can't easily provide. But a company's success isn't usually just about one flagship product, right? No matter how good it is. What else is Zeta doing strategically, maybe behind the scenes, to fuel this kind of consistent growth and market penetration?
Well, the agency business is definitely showing significant momentum. That's another key area. Zeta has seen a 40% year-over-year growth in brand count just with the large agency holding companies, 40%. And they're actively onboarding additional independent agencies onto their platform too. This partnership model, it really highlights a growing trend. Agencies are realizing that building deep proprietary AI infrastructure themselves is, frankly, prohibitively expensive and slow. By leveraging Zeta, they get instant access to cutting-edge tools, proprietary data, stuff that would take them years and hundreds of millions to develop in-house. It lets them focus on strategy and creativity, not tech debt. It's a very symbiotic relationship. Both sides win.
That makes a lot of sense. It sounds like that classic build versus buy dilemma for agencies, but maybe supercharged by the complexity of AI. But are there any downsides to the agencies, becoming so reliant on Zeta's tech? Does it limit their own innovation or create vendor lock-in concerns that agencies might be wary of?
That's a valid concern, definitely. And it's probably why Zeta emphasizes their role as an enabler, not a replacement. The value proposition is about augmenting agency capabilities, not supplanting them entirely. Zeta's platform is designed for integration, for flexibility. It allows agencies to plug in their own creative layers, their own strategic thinking. But the proprietary data Zeta brings is unique. It's hard to replicate. That's a big driver for adoption. And their continued investment in their AI lab is key here. Agencies seem to trust they're getting access to the very best without needing to shoulder that massive R&D burden themselves. It basically allows agencies to immediately deliver leading-edge solutions to their clients without the huge upfront cost or the risk of their own tech becoming outdated really quickly.
Okay. This is about empowering their partners, helping them scale their own value. Got it. What about Zeta's internal strategy for growth, especially in getting existing customers to use, more of their services, expanding within accounts?
Right. A core long-term growth driver and a huge success factor this quarter is their One Zeta initiative. You hear them talk about this a lot. The whole purpose of this is to accelerate multi-use case adoption, getting clients to use Zeta across acquisition, growth, and retention, not just one piece. And the benefits are pretty clear. Customers see substantially better ROI, they report higher net promoter scores, NPS, and they become stickier customers over time as they broaden their use of the platform. It's like going from just ordering an appetizer to getting the full tasting menu right. For example, they mentioned a national discount furniture chain already using Zeta for growth marketing. Well, they expanded under One Zeta to include retention and acquisition, unifying all their customer data on that single platform. Similarly, a leading hospitality brand, they started with growth, expanded to retention using Zeta's email capabilities, and now they're evaluating mobile and customer data platform CDP integration. Again, bringing all their customer data together for that single unified view.
How challenging is it, though, to get customers to adopt multiple use cases like that? I imagine companies have existing tools or processes. What specific internal mechanisms or, client-facing strategies does Zeta employ to overcome that inertia, that tendency for clients to just stick with single solutions?
Oh, it's definitely a challenge. You're right. Companies often have ingrained habits or maybe existing vendors they like for different marketing functions. Zeta's approach seems multi-pronged. First, they focus on demonstrating undeniable ROI from that initial use case. Build trust, build credibility. Then they leverage their proprietary data and AI insights to proactively identify other areas where they can add value. They essentially show the client, look what you're missing out on over here.
Huh.
Operationally, they structure their sales and client success teams to really encourage that cross-solution adoption, often by highlighting the seamless data flow and the cost efficiencies you get from a unified platform versus, juggling fragmented tools. It's a classic land and expand strategy, but really driven by demonstrable value and that deeply integrated tech.
That's a smart approach. A patient one? Maybe. And they're clearly investing to support this growth, aren't they? I heard about some key hires, particularly on the engineering and R&D side.
Yes, exactly. They've made strategic investments in both sales, headcount, and engineers. Notably, Nate Johannes was appointed president of the Zeta Data and AI Lab and global head of research and development. That's a big signal. These investments, according to the CEO, are proving to more than pay off. They're driving higher growth with higher gross margins, which demonstrates a really disciplined approach to scaling. The CEO also emphasized, interestingly, that they've been smart about eliminating functions that weren't driving value to free up budget for these key hires, making sure every investment dollar is highly strategic.
Okay, so with all this financial strength, the strategic execution, I'm curious about how Zeta is navigating the broader market. We're in a climate where, let's face it, many companies are struggling with macroeconomic turbulence, budgets are tight. What's allowing Zeta to not just survive, but actually accelerate their growth in this environment?
This is where their ROI-centric solutions become a massive competitive advantage. You really see it here. While many traditional ad spend models, things like brand awareness, might get cut during economic pressures, Zeta's platform directly connects marketing spend to measurable, often immediate returns. When every dollar needs to work harder, companies naturally gravitate towards solutions that offer that transparent ROI. The CEO even highlighted this shift in perception. From Zeta Who a few years ago to now Why Zeta. That indicates growing brand recognition, sure, but also vastly improved pipeline conversion. And it's not just a catchy phrase, right? It's a sign that the market is finally moving past just basic analytics. Now, they truly demand demonstrable ROI. It makes Zeta's model uniquely suited to the current economic pressures. They become the go-to solution when marketers need to prove their value internally. And interestingly, they also mentioned they see their partnership with Amazon as an expanding channel, not really a competitor, which is quite telling about their strategic maturity.
Here's where it gets really interesting. Seeing Amazon as a channel, not a threat. That signals a very mature approach to market positioning, viewing large players as potential collaborators. This raises an important question, though. How does all this strong Q2 performance, this strategic clarity, how does it translate into their outlook for the rest of the year and their longer-term vision?
Well, they've significantly raised their outlook, which reflects that strong first half performance and their confidence. For the full year 2025, they're now projecting revenue of $1.263 billion at the midpoint. That represents a robust 26% year-over-year increase. Adjusted EBITDA is expected to reach $264.6 million at the midpoint. That's up a fantastic 37% year-over-year. And perhaps most notably, their free cash flow guidance. That's increased to $142 million at the midpoint, a significant 54% year-over-year jump. It's particularly impressive, I think, that the free cash flow guidance increase is meaningfully ahead of the adjusted EBITDA increase. That leads to improved cash conversion projected at 54% for 2025. That's up from 48% in 2024. That improved cash conversion, again, it really speaks volumes about efficiency.
54% cash conversion for the year. Wow. And beyond 2025, I know they have some bold long-term targets.
They do. They reaffirmed their ambitious Zeta 2028 targets. Shows immense confidence in their trajectory. They're aiming for over $2.1 billion in revenue by 2028, an adjusted EBITDA margin of at least 25%, and a free cash flow margin of at least 16%. That translates to over $340 million in free cash flow. So yeah, it's a very clear and ambitious long-term roadmap they've laid out.
And to support this growth and presumably shareholder value, I saw the board approved an additional share repurchase program.
That's right. An additional $200 million 2-year share repurchase authorization. It supplements the existing program. And they noted they're making good progress in reducing equity dilution as well, so returning value to shareholders while managing dilution from growth.
Okay, that's a strong vote of confidence in the board. But, with such ambitious goals, such rapid innovation, what are some of the potential risks, the challenges they've identified that could maybe impact this impressive trajectory?
This raises an important question, doesn't it, about sustainability in such a fast-moving sector like AI marketing?
Exactly. I mean, while they list competition generally, the real challenge at AI marketing isn't just more players, right? It's the speed. the speed at which new specialized AI models emerge. How does Zeta's foundational AI lab, the one that Johannes is leading, how does that specifically future-proof against this rapid technological obsolescence? And on macroeconomic pressures, can you give an example of how their ROI-centric approach truly insulates them compared to, say, a traditional ad spend model during a downturn?
Those are critical points. Yeah. So Zeta seems to counter that technological obsolescence risk by focusing on building foundational AI models and leveraging their massive proprietary data set. These are designed to be highly adaptable rather than just developing individual single-purpose AI tools that might become outdated quickly. Their AI lab, under Nate Johannes, it's designed to continuously integrate new advancements to ensure their core models remain at the cutting edge. It's positioned as a continuous core R&D investment, not just, adding one-off features. Regarding the macroeconomic pressures, the insulation really comes from the fact that their platform is designed to make marketing more efficient. That's the key. During a downturn, companies aren't necessarily cutting marketing entirely, they're scrutinizing every single dollar spent. Zeta's ability to demonstrate that direct measurable ROI, showing, for instance, a clear link from a specific campaign to a specific sale or lead, it makes them seem more like an essential spend rather than a discretionary one. If a marketing channel is proven to drive, say, a 5x return on investment, it's far less likely to get cut than general brand awareness campaigns when budgets get tight.
That makes a lot of sense, especially in the current climate.
Yeah.
Okay, so finally, what can we look forward to from Zeta? Anything coming up that might signal their future direction or maybe further product developments?
Well, they're holding their 5th annual Zeta Live conference soon, October 9th in New York City. They've got some big names headlining, icons like Tom Brady and Serena Williams. And the day before, October 8th, they'll host their second Investor Day. These events, they're not just marketing spectacles, they're usually strategic platforms for announcing future product launches, detailing their long-term roadmap more, and showcasing their expanded leadership team. So keep an eye on those dates. Overall, though, the strong first-half results seem to give the company significant conviction and visibility. They seem poised to capture even more market share moving forward.
What an impressive deep dive into Zeta Global's performance. So to sum it all up for everyone listening, their current momentum, it's clearly driven by that really robust Q2 performance we talked about. Strategic AI-led product innovations like Zeta Answers are key, those effective agency partnerships we discussed, and the One Zeta initiative pushing broader platform use. All of this is contributing to significantly raised financial guidance for 2025 and those ambitious long-term targets for 2028.
Yeah, and if we connect this to the bigger picture for you, the listener, Zeta's strategy, focusing on deep integrated AI and data-driven solutions rather than just, a collection of fragmented tools, it really offers a kind of blueprint for success. Especially in the increasingly complex world of marketing today, it really illustrates the tangible benefits of these unified platforms that can acquire, grow, and retain customers more efficiently, all by understanding and acting on data in real time.
Exactly. It really makes you wonder, doesn't it? Given Zeta's success in consolidating marketing efforts and leveraging all this proprietary AI, how might this trend reshape the very definition of a marketing agency in the coming years? Could it push them further into these strategic partnerships, like the one they have with Zeta, rather than trying to build extensive in-house technology themselves? Something to ponder.